You're too late to get to 1 Bitcoin. It's out of reach for 99% of humanity. But what if I told you that 0.01 Bitcoin is the new 1 Bitcoin? Same price, same position on the adoption curve, same wealth potential. And I have the data to prove it. In this video, I'm going to break down why 0.01 Bitcoin today is in the same exact position of 1 Bitcoin in 2017. The price comparison, the adoption math, the scarcity data, and return projections based on historical CAGR and the potential CAGR going forward. Plus, I'll show you why BlackRock just increased their holdings, why JP Morgan is creating Bitcoin bonds, and why a Wall Street veteran is saying that this is Bitcoin's IPO moment. Let me explain. I'm Brandon from Green Candle. I've interviewed over 200 of the brightest minds in Bitcoin, and if you want to know why 0.01 Bitcoin is the opportunity of a decade, make sure you hit that subscription button right now. Let me start with the price equivalence. In January 2017, Bitcoin's price was just around $1,000. Today, Bitcoin's price is just around $90,000. So the cost to buy 0.01 Bitcoin is just under $1,000, right around 900. So it's almost an identical entry point. $1,000 got you 1 Bitcoin in 2017, where 900 gets you 0.01 Bitcoin today. But here's what that $1,000 in 2017 became. In December, it became $19,000. It 19x'd in 12 months. In November 2021, it 69x'd and got to 69,000. Today, it's $90,000, or a 90x from that entry point. A $1,000 decision in 2017 is now worth $90,000. But here's what most people miss. The price equivalence is just the surface. The real equivalence is in the adoption data. And that data is even more bullish for 0.01 Bitcoin today than it was for 1 Bitcoin in 2017. Let me show you. Let's start with the Bitcoin adoption data. Bitcoin adoption in 2017 had about 15 to 20 million users globally. The percentage of the world population that used and owned Bitcoin was just about 0.25%. Meanwhile, institutional ownership, there was none. ETFs, they didn't exist. Public companies holding Bitcoin was zero, nation states zero, and Wall Street sentiment from one of the biggest haters in Bitcoin, Jamie Dimon, was Bitcoin is a fraud back in 2017. Meanwhile, today, there's about 500 to 600 million users globally. The percentage of that world population now is about 6 to 7%. Institutional ownership is on the rise with BlackRock, Fidelity, State Street, and dozens more. There's 11 spot Bitcoin ETFs holding about 1.5 million Bitcoin total. Public companies, well, there's 209 of them at the time of this recording now holding Bitcoin on the balance sheet, with MicroStrategy leading the way with 650,000 Bitcoin on their balance sheet. Nation states like El Salvador, the Kingdom of Bhutan, and more are considering holding Bitcoin. And Wall Street sentiment, well, that's actively changing. They're all trying to create Bitcoin financial products. So here's the adoption math. In 2017, owning 1 Bitcoin puts you in the top 0.1% of Bitcoin holders. Today, owning 0.01 Bitcoin puts you in the top 0.125% of the global population. Out of 8 billion people, there's only 14.3 million wallets that have more than 0.01 Bitcoin, and that roughly equates to about 10 million people when you account for multiple wallets. That's only 1 in 800 humans. In 2017, you were earlier than 99.9% of the global population. Today, you're earlier than 99.875% of humanity. The adoption position is equivalent. But here's where it gets more interesting. The scarcity math shows that 0.01 Bitcoin today is actually a better position than 1 Bitcoin was in 2017. In 2017, there was just 16 million Bitcoin mined. There was about 5 million left to be mined, about 3 to 4 million lost forever, and about 12 to 13 million left in circulating supply. Today, the total mined is about 19.7 million, which makes about 1.3 million left to be mined. There's about 4 to 6 million Bitcoin lost forever, and the available circulating supply is about 14 to 15 million Bitcoin. But here's the critical difference. In 2017, exchange balances were high. Institutional holdings were zero. There was no systematic accumulation. The supply was freely available. Today, exchange balances are just at 2.1 million Bitcoin. The ETF holdings are at 1.5 million Bitcoin, and that's 7.1% of the total supply. MicroStrategy itself holds 650,000 Bitcoin. That's over 3% of the total circulating supply. Plus, the miners are selling less post-halving. So here's the numbers. ETFs and MicroStrategy alone hold 2.15 million Bitcoin. That's 10.2% of the entire supply locked up. That's more than what's sitting on all of exchanges combined right now. In 2017, 0% of the supply was institutionally locked. Today, institutions hold more Bitcoin than all of the exchanges. But here's the data I haven't shown anyone yet. During the crash from 122,000 to 82,000, the number of wallets holding 0.1 Bitcoin or more decreased. Meanwhile, the wallets holding 1,000 plus Bitcoin increased. Whales accumulated while retail sold. 50,000 Bitcoin was moved off exchanges into cold storage. The supply available to you is shrinking every single week. In 2017, you competed with retail traders for 1 Bitcoin. Today, you compete with BlackRock, Saylor, and sovereign wealth funds for 0.01 Bitcoin. So 0.01 Bitcoin today is actually scarcer than 1 Bitcoin was in 2017. Now, let me show you what TradFi is doing right now and why it confirms everything that I'm telling you. BlackRock just increased their Bitcoin holdings of their own IBET ETF. The world's largest asset manager, $10 trillion under management, is accumulating more Bitcoin. They're not selling, they're buying. Their ETF nearly holds 1 million Bitcoin and they're adding more. But here's something that will shock you. JP Morgan is attempting to create Bitcoin bonds. Yes, JP Morgan, the same bank whose CEO called Bitcoin a fraud in 2017. The same bank that's been hostile to Bitcoin for years. They're now trying to create Bitcoin-backed financial products. Why? Because their clients are demanding Bitcoin exposure. And if JP Morgan doesn't offer it, their clients will go somewhere else. Think about what that means. In 2017, Wall Street laughed at Bitcoin. In 2025, Wall Street is racing to create Bitcoin products. BlackRock accumulating, JP Morgan creating Bitcoin bonds, Fidelity, State Street, Citadel, all in. This is institutional FOMO, and it's just getting started. The institutions missed 1 Bitcoin at $1,000. They're not missing 0.01 Bitcoin at 900. They're accumulating as fast as they can. And they're competing with you for that limited supply. Now, let me show you something that explains exactly what's happening and why one Wall Street veteran is calling this Bitcoin's IPO moment. Jordy Visser, former CIO of Weiss Multi-Strategy Advisors, a Wall Street veteran, coined the term for what's happening right now. He calls it Bitcoin's IPO moment. Let me explain what this means. When a company IPOs, early investors, venture capital, founders, employees sell shares to the public. They took massive risk when the company was unproven. They held through uncertainty, volatility, potential failure. Now they're cashing out to institutions and long-term public investors. The new buyers get a de-risked asset. The company is proven, revenue exits, the business model works, less risk, less upside, but still significant returns. That's exactly what's happening with Bitcoin right now. The early adopters bought Bitcoin at $1, $10, $100, $1,000. They held through 80% crashes like Mt. Gox, China bans, the 2018 bear market, the FTX collapse, you name it. They survived volatility that would break most investors. Now they're selling, but not to retail. They're selling to BlackRock, who just increased their holdings, JP Morgan clients via new Bitcoin bonds, Fidelity, sovereign wealth funds, pension funds, corporate treasuries, MicroStrategy. The Bitcoin is transferring from high-risk early adopters to long-term institutional holders. So here's why this matters for the 0.01 Bitcoin. In 2017, you were buying from early adopters. Bitcoin was unproven. There was no institutional validation. Massive risk. Potential for total loss. Jamie Dimon calling it a fraud. But massive upside if you were right. Today, you're buying at the IPO moment. Bitcoin is proven. Institutional validation everywhere. There's less risk. The will it survive question is answered. BlackRock is buying. JP Morgan is creating Bitcoin products. The same people who laughed at it are now racing to own it. The risk reward has shifted. Early adopters took the 100x risk for the 1000x returns. Today, buyers take much less risk for potential 10x to 100x returns. 0.01 Bitcoin today is like buying at a company's IPO. 0.01 Bitcoin today is like buying a company at IPO. The garage startup phase is over. The product market fit is proven. The institutions are buying. You missed the seed round, you missed the Series A, but the IPO is happening right now. And at 0.01 Bitcoin, it's your ticket. Now let me show you the return math that can show you how you can get that 90x just like buying one Bitcoin did in 2017. Here's Bitcoin's historical CAGR, or cumulative average growth rate. From 2011 to 2024, it's about 150%. 2015 to 2024 is about 80%. 2017 to 2024, it's about 60%. And 2020 until 2024, it's about 50%. So even in its quote unquote maturing phase, Bitcoin was still delivering 50 to 60% average returns. So let's run the projections of 0.01 Bitcoin at $900 to get you that 90x return. In a conservative scenario, about 21% CAGR, this is Michael Saylor's projection. In 2025, you have that $900 worth of Bitcoin, or 0.01, and it'll take you 23 years or till 2048 for you to get that 90x return. Meanwhile, if you have the similar CAGR that we've seen over the past 5 years of about 50%, well, it'll take you just 10 years to reach that 90x return. Now, if we reach exit velocity, where we start to accelerate adoption and we reach that 80% CAGR, which will match the 2015 to 2014 time, you could see that 90x in 8 years. So here's some reference points for this. One Bitcoin in 2017 at $1,000 took 8 years to reach 90x, or 90,000. Even at Saylor's conservative 21% CAGR, you hit 90x by 2048. At historical 50% CAGR, you hit 90x by 2035. At an aggressive 80% CAGR, you hit 90x by 2033. Here's the key insight from the IPO framework. Early adopters needed that 80 to 150% CAGR to justify the risk. Post-IPO buyers can build wealth with 21 to 50% CAGR with far less risk. You don't need Bitcoin to repeat its early returns. You just need it to continue maturing as an asset class. And with BlackRock buying and JP Morgan creating Bitcoin bonds, that maturation is accelerating. Here's data that most people haven't seen. Bitcoin's available supply is shrinking faster than ever. The exchange balances have gone from 3.1 million in 2020 all the way down to 2.1 million today. That's a 32% decrease in supply since 2020. Meanwhile, the institutional demand is exploding. And here's the math. There's about 450 Bitcoin mined per day. The ETFs alone buy about 1,000 to 5,000 Bitcoin per day. MicroStrategy buys 1,000 per week, and demand is exceeding the new supply by 2 to 10x per day. The available supply left on exchanges right now is 2.1 million Bitcoin. Meanwhile, ETFs and MicroStrategy combined have 2.15 Bitcoin on their balance sheets. Institutions now hold more Bitcoin than all of the exchanges combined. This is Jordy Visser's IPO moment playing out in real time. Early adopters are selling. BlackRock, JP Morgan, and other institutions are starting to come in and buying. At this rate, the amount of Bitcoin left on exchanges falls to 1.5 million in the next 18 months. This is the supply shock forming in real time. And that 0.01 Bitcoin positions you on the right side of it. Now, some people watching this are convinced that lower prices are coming. They've been waiting since 2017. This is where having liquidity without needing to sell becomes critical. And that's where Salt Lending comes in. Salt Lending lets you borrow against your Bitcoin without selling it. People who missed one Bitcoin at 1,000 in 2017 were waiting for $500. People who will miss at 0.01 Bitcoin at 900 are going to wait for 60K Bitcoin. If you already own Bitcoin and need cash, don't sell your position and end up like the 2017 waiters. With Salt, you could keep your Bitcoin, get liquidity, and stay positioned while BlackRock and JP Morgan accumulate. Green Candle listeners also get an exclusive offer at saltlending.com/green-candle. Or the link in the description. They also offer some of the best rates in the industry, starting as low as 9.95% with a 12-month duration, and you could borrow up to 70% LTV. You get no prepayment fees, no credit checks. Unlocking your liquidity is simple. And with these Bitcoin dips, you don't have to stress about potentially being liquidated with their Salt Shield. Now let me show you the wealth transfer data from the latest crash. This data confirms everything. When you see the crash from 122,000 to 82,000, it almost confirms that this is the Bitcoin's IPO moment, because the wallets with 1,000 plus Bitcoin increased. Meanwhile, the wallets with 0.1 Bitcoin or more decreased. Retail sold, whales and institutions bought. 50,000 Bitcoin left exchanges during the crash, and that's over $4 billion in Bitcoin moved to cold storage. So who was selling? It's those retail investors that have less than one Bitcoin. They panic sold and dropped below their thresholds. Some of the early adopters took profits after hodling for years. So who was buying? Wallets with 1,000 plus Bitcoin accumulated aggressively. MicroStrategy bought 45 of the last 52 weeks. BlackRock increased their holdings. ETFs absorbed the supply from weak hands. This is the IPO dynamic. So here's what this means. The same pattern that happened with one Bitcoin back in 2017 is happening right now with 0.10 Bitcoin. Today, retail is selling those 0.01 Bitcoin positions. BlackRock and JP Morgan, they're buying. The wealth transfer from weak hands to institutions is identical. And if you want to accumulate 0.01 Bitcoin systematically without becoming another weak hand statistic, there's a method that most people don't consider. Simple mining lets you mine Bitcoin without the equipment, noise, or electricity costs. They handle everything: hosting, maintenance, and repairs. You get KYC free sats delivered to your wallet while helping secure the Bitcoin network. So here's why this matters. The people who accumulated one Bitcoin didn't time one perfect buy. They stack consistently. Mining lets you accumulate towards that 0.01 Bitcoin every day, regardless of price. There's no panic selling, no timing the market, no becoming a weak hand that sells to BlackRock at the worst time. Systematic accumulations, like the institutions that are buying 45 out of the last 52 weeks. Green Candle listeners also get 1 year of free repairs and a 7-day free trial if you go to simplemining.io/greencandle or the link in the description. Now let me give you the final data point. 0.01 Bitcoin today is about $900. One Bitcoin in 2017, that was about $1,000. The risks in 2017 were significant. The risks now, not so much. Bitcoin's IPO moment is now. So get in while you can. Institutions are buying as much as possible. Nation states are just about to start coming in. And the demand for Bitcoin is going up significantly. For breakdowns of Bitcoin data and wealth positioning, make sure you hit that subscribe button. And thank you for watching and tuning in. I've got 2 more great videos that I think you guys should check out right here. And I'll catch you guys all at the next one.